I'm going to now invite Mayuresh Joshi from Angel Broking to this conversation. Mayuresh, look what's happening in the stock markets since the start and the end of this AGM. The vision of Mukesh Ambani being laid out very clearly where Reliance is headed. It's no longer going to be an old economy company. It's India's largest conglomerate, but the focus will now be on new age businesses that's going to be as big as the petchem and energy businesses. You're also seeing a reaction on the competitors, whether it's the telecom stocks, the media stocks. We don't have large e-commerce companies listed as yet. What do you make of all of this and the fact that you've got Reliance Industries trading in the red? Maybe that's because the markets had expected a special dividend or an announcement on the retail IPO of some, influential brokerage firms had got the expectations high on that.
No, afternoon, Nayantara, I think the expectations are always there from Reliance AGM. But a large element in terms of the transition roadmap that Mr. Ambani has laid over the next 10 years, I think those will clearly define the earnings trend for the company. At this point of time, as it stands, Jio plus retail contributes 13% of EBITDA. So I think the kind of contribution gains that both these entities are expected to make over the next 8 to 10 years are quite significant. The other element in terms of the capex, I think a large element in terms of the core capex of $18.5 billion is largely behind them. I think the kind of commissioning that we have seen in the past with the ethylene project coming up, the off-gas cracker, the petcoke gasification, I think this is all going to incrementally lead to earnings improvement going forward, and that is going to clearly reflect in both their petchem and refining businesses. Again, the complexity specifically for the refining business is what holds Reliance apart from their competitors. So the distillate yield in terms of yield improvement, in terms of crude optimization is clearly going to hold the refining business. In terms of the transitioning, in terms of futuristic products and focusing more on the petchem and the specialty side of the business, there again I think the kind of improvements that one probably seen in terms of deltas, specifically through their product crack management, whether it be naphtha, fuel oil, polymers, polyester, I think it's incredible in terms of how they're actually able to manage this even in volatile times. So the margin and earnings improvement from these two cash cow businesses should continue. For Jio in particular, I think the scope that Mr. Ambani has given to his team, probably for the feature phone from 25 million subscribers to 100 million subscribers and getting down the price to 500, I think that's going to be a disruptive trend in terms of getting this feature phones out in the market and probably gaining more market share. As Nitin was alluding to, because of the natural factors of Idea Vodafone needing to reduce their subscriber market share in a few key circles, they're obviously going to see improvement on that front. So all in all, I think the improvement in terms of technological changes, the expectations of retail contributing significantly along with Jio to the overall EBITDA, and the transitionary factors because of the whole host of capex that has been done and expect to get earnings growth should bode well for Reliance. So I think positive takeaways from the AGM.